Hey members, good morning, happy Friday, hope everybody's great. Super slow week. Tough week as well, just because nothing's going on. Traders get themselves in trouble when they try to make something happen. That's why when I'm always talking about, guys, be patient. If you feel like you're getting antsy, if you feel like you're trading just because you're sitting in front of your computer, take a walk. Get away from the market. You can't make something happen. And I see this, what we're doing in the bonds, because we've been trading bonds since I started active day trader, the end of 2015. Bonds are going to go lower. The futures are going to go lower. The yield's going higher. That's what's happening. The Fed is raising the front end. The back end's really not moving very much. But in order for the back end to stay higher than the front end, the back end, the 10-year, the ZB, the UB need to trade down so those yields go higher, or else we're going to end up in an inverted yield curve environment. I really don't think that's going to happen. So I want to take you to the 10-year futures chart, because this happens every single time the futures rally. And what traders start to do, especially, respectfully, you guys, when the position starts going against you, you start to think, maybe we're wrong. And I start to get all these articles on the 10-year trading 2.5%, the 10-year trading 2.25%. All these different articles about we're going into recession. We're going to be in a inverted yield curve environment. And what I want you to do is stick to your thesis. Have a plan. Trade your plan. If it works, great. If it doesn't work, we're going to lose some money. But don't all of a sudden change your position just because the market's not moving. So let me take you to the chart. I'll show you exactly what I'm talking about. So in front of you, I got the 10-year, and then we got S&Ps. Okay? Starting with the 10-year. If I open it up, and let's put it on a time frame going back 20 days. We're short. People are feeling pain. We're on the wrong side of it right now. But that's why it's a money management game. We want to be able to withstand this kind of move, because the good stuff, once it starts rolling over, it's going to happen really, really quick. Watch what happens if I expand this. If we go to a 1-year daily or a 3-year. Look at the 3-year. The 3-year overall rates are going higher, which means the price is going lower. But it's not easy. The market's not going to say, hey, all aboard, wait for everybody to jump on the train, and then just go like it did right here. It's tough. Very, very quiet trade for a long time, but inevitably it comes off. This trade's a little bit easier because it's really just a one-sided trade. We rally here. Right here, I'm starting to get articles that the 10-year is going to trade 2.5, the 10-year is going to trade 2.25, but then it comes off. We're rallying a little bit now, but in perspective, it's just a slow market. There's just nothing going on. So don't get scared out of your position. If you're getting scared out of your position, you need to work on money management. You're getting into those trades too early. You're putting too much size in too early rather than slowly laddering to those different trades. We're having a conversation in the advanced bond room this morning about our trades starting to work as far as the spreads and the butterflies. So here is the view that we shared August 21st. Just like in the Premier membership, good morning, ES 2650 level, we're very, very bullish, right? So right now, the market's trading 2666, extremely, extremely bullish. For those frustrated, please realize this is trading. It's the right position being short yen, but the market doesn't move on our time frame. The market will move when it's ready, and either you're in the trade or you're not in the trade. Once it starts moving, there's no trying to get on the trade. As long as the market doesn't get killed, bonds will sell off. The trades that we liked in August 21st is short knobs and long bub. Short knobs 2 times and long bub. I added this because there was a lot of conversation lately about technical analysis in the advanced bond room, and that's really not what we're doing. What we're doing is we're looking for kinks in the yield curve. We're looking for things that are off value. It's not traditional technical analysis like many of you learn, like many of you rely on. That's why I really don't want technical shared in the bond room, because it just doesn't hold a lot of weight, in my opinion. And I have a responsibility to the rest of the members in the room that we're sharing things that I've learned and that have worked for me professionally. August 21st, short knobs 2 times, long bub. Let's go to the charts. For those who have taken bond boot camp, short knob, long bub, all we are is long the butterfly. So that's this right here. We're long the ZB butterfly. Here's the knob right here. You can see the knob sells off smartly. And here's the bub, rallied a little bit, coming back. But nevertheless, what we use these different spreads for is we want to finance the outright short ZN position. So on the Facebook room this morning, there was talk about, hey, positions are working, the butterflies are working, the spreads are working, what are you guys going to do? And my advice to people, what I want them to consider is, if the trade's been difficult for you, if you feel like, you know what, struggling, you're having a tough time, and you're in these flies, you're in these spreads, you see a profit, hey, take a profit. Lock in a profit. You're not covering too quick. Nobody ever went broke taking profits. What I like to do is use the spreads, and these were great trades, quick trades, use the spreads, lock in profit to buy time on the real trade. And the real trade is going to be outright ZN futures that I strongly believe will inevitably come off all the way down here, but they're stubborn little things. They're going to move when they're ready. They're definitely not going to move when we're ready, and they're definitely not going to move if you're uncertain and not confident and you need them to move by a certain time frame. The market just doesn't work like that. The market can always sniff out those weak hands. So the overall message of this video: have an opinion, manage money around that opinion, but don't all of a sudden the market starts going against you, just take the other side and think, oh no, I'm wrong, I'm going to flip my position. What ends up happening is you churn your account. It's like if you're short the overall equity market and it rallies, and you're like, forget this, I'm getting long. You flip around your position and all of a sudden you just bought the high. I know you're out there thinking, shaking your head, like, wow, that's happened to me. Don't let the market dictate your position. You're in control of your position. Sometimes we're going to lose trades. We're going to lose money in trades. If you're short the ZN, it's going against you, you're uncomfortable, get out, that trade's over, reevaluate. But let's not, if it goes against us, think, oh no, the trend is going in the other direction, I'm going to flip around my position real quick. Okay? That doesn't work. You're expecting too much. You're chasing. That's angry trading. That's losing any kind of discipline that traders need. Okay? Hope you don't mind the rant. Had to get that off my chest. Hope you're great. Please feel free to email any questions, support@ActiveDayTrader. Thanks, guys.